Silver prices have fallen over 8% this week, testing fresh 2026 lows near the $54 mark and raising steeper drawdown risks in line with escalating crude oil prices and US-Iran tensions. Hello everyone, this is Razan Hilal, market analyst with Forex.com, live from Dubai, day July 17, 2026. So we'll be starting with a 6-month time frame on the silver chart to visualize the current price action and where it stands within the broader framework of the chart's history between 1930 and 2026. Current price action is attempting a breakdown below the 50% retracement of the advance between 1930 and 2026, facing a critical historical confluence zone that aligns with the golden 618 retracement of the advance between 1930 and 2026, and also aligns with a multi-decade resistance connecting consecutive highs between 1980 and 2025, and that is near the $46 zone that may present a major dip buying opportunity for investors should silver extend drawdown risks all the way down towards that barrier, in line with escalating or re-escalating US-Iran tensions that are pushing crude oil prices to the upside and lifting concerns for a higher for longer interest rate environment, higher inflation rates, and of course risks for higher yields. Now on the upside, we're going to drop down to the daily time frame and to visualize the short-term levels that we're currently dealing with. Silver's price action is still capped below the bounds of a descending resistance connecting lower highs since June 2026, which is keeping an overall bearish bias on the chart until we have a confirmed breakout for the silver price action above the bounds of that descending resistance. Now, in terms of the downside and the downside risks that we are currently dealing with, in line with the mounting inflationary tensions or inflationary concerns in the markets as a result of the disruption for the supply chains across the Strait of Hormuz, a sustained breakdown below the 54 mark would likely extend drawdown risks towards the 50 psychological mark for either another potential short-term rebound or extended drawdown risk towards the mentioned historical confluence zone near the $46 mark. And from a daily time frame, we can also see that it also aligns with the lows of October 2025, which is creating a high probability rebound setup for silver should we have that drawdown occur. Now, in terms of daily momentum, we can also see that silver was attempting a breakdown below that head and shoulders pattern formation that has its target aligning with oversold conditions last seen in 2020. And should we have that steep drawdown scenario occur, we might have similar momentum conditions dating back to 2020, possibly opening the path for long-term bullish rebound on the silver chart, which would also likely be aligned with the rebound across the tech and AI sectors that are currently facing drawdowns or momentum recharge ahead of mega cap earning and align with concerns for overvaluation across the AI sector. Now on the upside, I'm going to look at short-term resistance zone over here that acted as a support for price action between June 24 and July 14, and that is near the $58 mark. Sustained hold above the $58 resistance, and also that might be above the bounds of that descending channel, would open the path for silver to retest the 60 psychological mark. Sustained breakout above the 60 psychological mark would likely test the 65 before confirming or increasing confidence towards the upside, possibly redirecting silver to forecast back towards triple-digit levels. For now, we still have bearish bias still in the picture until we see a permanent resolution or peace deal between the US and Iran, and alongside resuming flows across the Strait of Hormuz, decreasing inflationary expectations and higher for longer rate expectations as well in the markets.